Leave your email if you want a recording. I'll shoot you a recording when it's available. All right, guys. So I think we're ready. Any questions before I begin? Once again, good afternoon. So let's begin. So today we're going to be talking about stock hunting and watch lists. Now, I want to go over a little bit about the importance of this topic, and I think most of you already know many headliner statements for the importance of this topic. But for us, it's finding the right stocks to trade. That's very important. Okay, we don't like to trade things that are not liquid. Their price action is very skinny and thin, which means that there's not much liquidity per candle, not much shares being bought or sold per candle, and we look for big activity stocks, big active stocks that are having a lot of momentum. Okay, otherwise it's going to be very difficult for you to be able to find a nice clear setup. Researching prior to trading day for maximum results. So part of finding stocks is researching in the evening, and actually that's going to be a webinar on August 6th, just to let you guys know. And by researching the day before, you could definitely find tons of stocks for your watch list to be able to trade for the next day. And I'll tell you exactly, or give you a hint later on how that could be beneficial. So the next one is a thorough watch list will keep you busy. So a thorough watch list, what's different from a thorough watch list to a regular watch list? One that's organized, okay? Maybe it's a little bit tedious, but every day you should be organizing your watch list, making sure you take out the noise, and if you have some of your favorite stocks that are now noise, put them into a different watch list as a pending watch list, okay? Everyone has their own little methodology. I have many different watch lists that I break them in, so that way I could always have a simple, organized way of having my watch list put out. So I'll have a regular watch list with the most active pre-market activity, as well as my favorite stocks to trade. And then I will have a pre-market and after-hour earnings watch list to separate them, so I could know right away whether I'm looking at a stock that has some sort of catalyst, or it's just a regular sector that's moving on behalf of the overall market. Now, finding food setups for the next trading day. Now, many people, they think that most of your profits are made by looking for stocks during the present day, but that's wrong. Actually, you find most of your best setups and your best profits and your best trades the day before. Okay, by researching the day before, and this goes to connects to the second bullet, I guess, is that by finding setups on wider time frames, okay, for the next day, you could wait for the shorter time frames to align with the wider time frames to be able to have a real big breakout or breakdown. Does everyone understand how that could work out? So the way we use our terminology is we're going to say that it's food. So what we want to do is find food the day before so we don't starve the next day. Okay? And that's what we do. We try to find as much food as possible the day before, so that way we're already set up for the next day. And it's the best feeling when they actually work out, because you're more prepared, and you have less of that impediment feeling where you feel it's indecisive, you're not sure about it, I didn't have enough time to look at it, maybe it's not going to be good. And it eliminates all of that because you already researched this the day before. It's like taking candy from a baby sometimes, all right? Well, that's why you have to organize it. You gotta eliminate the noise, all right? Using multiple mediums to find food. So don't just go off of your favorite stocks things that stocks that you understand the personality. You always have to adapt to the market, and the market will always change the activity of stocks. Some stocks today will be so active, a week later they'll be thin as hell. Okay, and for instance, AET and Hum. Who was watching AET and Hum this week so far? Anybody? Right, those were moving this week until today. Today, completely cloudy. All right, was all over the place, choppy. So you always have to readapt your watch list and find different AET and Hum. So Hum, sorry. So AET and Hum. Sorry, that's supposed to be $1. Now, so we're going to be looking at different places where we could find stocks and food. All right, and putting all this together, okay, allows for BattleCom to cultivate. And I'll explain a little bit about what BattleCom is later on. And I threw in a couple other things as well. So let's move on. So the first thing you want to do is preparation. The most important factor you control is your preparation routine. Okay? It's all about preparation. That's why I tell people, don't look at a lot of people who say, you know, after 4 o'clock I'm out and I'm going to have fun. Most of the people who are being profitable consistently day after day are doing tons of research after 4 o'clock. It's not a 9-to-5 job. It's a job that requires passion, drive, and a lot of work at night. Okay? But it should be enjoyable. It shouldn't be tedious. Put on some music, whatever you want. Consistency breeds and attracts consistency. Okay? The goal is to acclimate yourself mentally by gathering information to prepare viable watch lists, complete with price bumper levels and the underlying patterns. So that means not only just have your watch list and call it a day. The day before, look at your watch list. Look for setups, okay, cup and handles, ascending triangles, symmetrical triangles, bull flags, bear flags, head and shoulders, bumpers such as support lines, resistance lines, tons of things that you could use, okay, moving averages. And the biggest problem is that most people tend to be lazy during the preparation, which leads to impulse trading, which leads to chasing and getting trapped and blindsided by the HFTs and algos. And other people that are more patient than you, okay, and prepared better than you. And this will definitely eliminate the deer in headlights or panic reaction that occurs when you're not prepared. All right, well, we'll get over that. It's a great question. So, hunting for food, Alpha 7's intraday scanning routine. Now, some of this stuff are going to be irrelevant to you, but I want you guys to kind of get an idea of how a routine should be created, okay? So, the routine will provide more than enough prospects to feed on every day. So, we're talking about food. We're talking about stocks, Forex, futures, we do everything. But let's just talk about equities for now. Now, one of the things you want to use is FinViz, all right? And I'm going to share my screen later and go over FinViz and what to really look at. And one of the most important sections that I look at is the major news section. It's a very small section right on the home page, and it'll tell you exactly what kind of stocks are having some big news. And that's important for us, especially in this type of market. This type of market is consolidated, it's slow, it's tight, and it is definitely diverged and dry. So the only thing you really want to be taking advantage of is stocks that have catalysts, okay? And we'll go over why that's important and how that comes into play. Then what you want to do is, the first thing you want to be looking at is the 1 minute and the 5 minute. Most of you who've been in my webinar, we go all the way to the daily on an intraday outlook. So you want to look at the 1 and 5 and see if there are any setups through the 1 and 5 minute. If you see the 1 and 5 minute have a setup, then look at the 15 and 60 and see if it's also heading in your direction. Obviously, this is a little bit of the Alpha 7 strategy so you may not understand it as much. All right. Then we go on to the plan AB, which is a multiple time frame setup. Okay, not just a one time frame setup, but there's a setup that's occurring not only on the 1 minute but the 5 minute as well simultaneously. Well, for us, swing trades do start from the 1 and 5 minute. And through laws of linearity, if they're provided, as you get to the wider time frames, you limit your shares and you hold on longer. And from there, you could decide whether it should turn into a swing trade or if you should just chop it off as either a one-day overnight trade or maybe just an intraday trade. All right. Not all trades could turn into swing trades. So it's always best to evaluate yourself as it goes by. Great question. So rinse and repeat. So obviously you go from the 1 minute and then you go to the wider time frames to be able to see if you could take the trade for a longer move. But don't hesitate to take small scalps, right? Especially in this market. You take a small scalp and then you hold on. Follow the risk and probability rules, which we'll go over a little bit later, and is very important. A lot of education companies, they go off of risk-reward ratio. But we don't care about risk and reward ratio. Okay, guys? Not all the time is the market going to provide you a beautiful setup with the cherry on top. Okay? It's not going to provide you all the time with a 2-to-1 ratio. The market doesn't work like that. It doesn't work off what you think the market is going to do. The market is going to do whatever it wants to do. So don't go off of a pre-based target, okay, or a pre-based entry or setup, okay? So for instance, if you're a 2-to-1 type guy, don't think just because you got into a setup that you have to take it 2 times your risk. Doing that is going to cause you to have trader suicide. You're going to lose definitely because you're not following the market now, you're following numbers. Numbers based on your own perception. Does everyone understand that? All right, so scanning and screening for patterns prospects. Now, what you want to do is think about it this way, guys. When you're going to be looking for stocks the day before, okay, at nighttime, you're not going to be able to look at the 1 minute, the 5 minute, the 15 minute. There's going to be no data. So what you want to do is you want to be looking at the wider time frames during the evening. So look at the hourly, look at the daily, look at the monthly, look at the weekly, and look for setups, look for big trendline patterns, look for gaps, look for big candlestick patterns, stuff of that nature. And when you do that, okay, and you set it up and you mark it down, for the next day, when it gets close to those wider time frame breakouts, look for the shorter time frames to align with it. And if they're aligning, be ready for a big, huge probability breakout. All right, and this is a good way to scan for stocks that may be reacting in the next couple of days. Instead of just saying, hey, I like this stock, hey, I like that stock, look for stocks from the wider time frames that are already showing setups for foreshadowing capability. Use scanning tools to speed up the process, and we'll be going over. Yeah, this is just like the sleeping giant. So this is another terminology that we use in Alpha 7, and it's called the sleeping giant. And if you could find the setup, such as the setups that we teach on the wider time frames, and if they align with the shorter time frames, you're going to have a huge pop, huge flow of volatility going your way. All right? And that's why we call it a sleeping giant, because it's not ready to break until what, guys? Can anybody guess? The wider time frames are not going to break until what? Anybody? Until the shorter time frames. Yes, exactly. Until the shorter time frames is ready. Otherwise, a lot of people, they'll get in, not looking at the one, ignoring the one, and then what happens? It's a premature entry. Premature entry comes back down, flattens out, prepares for the next setup on the 1 minute, and boom, there it goes. They're ready to pop. And for those of you, Nuriel, David, they're in my chat room. They could speak for it themselves. They've seen it happen many times. And scanning for prospects by chart pattern. So we'll go over that with FinViz. Now, One of the most important things that you want to find are gappers and dumpers, and I'll explain why. Okay? A gapper and a dumper, there's intrinsic value that is processed either through the evening or actually just from the evening or through pre-market through big news. Okay? And this intrinsic value is basically telling you that there's a huge catalyst here. Why is the stock up $2 or down $2 or up $1? And the reason being is because there's some sort of catalyst that is pushing it. And if there is some sort of catalyst that is pushing it, then it's going to be a very reactive stock. Okay, gappers and dumpers lead to a lot of opportunities. So what you want to do is you want to look at the pre-market, check your top 10 list for gaps and gap downs on NYSE, NASDAQ, on Finviz. Okay, you could find other websites such as briefing.com, which is also part of Yahoo. Benzinga provides good gapper dumper info, especially if you're a Benzinga Pro. You don't have to do that. There's plenty of free information on scanners. You could also watch the tickers on CNBC pre-market to gauge the most active pre-market movers. The more volume and activity, especially in the pre-market, the greater the pockets of liquidity, as it implies more participants. Make sure it is a legitimate gapper, all right? And that means that intrinsic value is there, all right? It's not through the pre-market, it's inching up little by little, okay? There's a big gap with no price action, $2 ahead, all right? Read the earnings, but don't waste too much time analyzing them. You should be focusing on price action itself. The only reason you want to be reading the earnings is probably to understand whether the price action is within the direction of the guidance or the earnings. And lastly, just to make sure that there is going to be activity for you to be able to make money and opportunities for you to be able to make opportunities. So don't let it blur your judgment. Now, playable gaps. So the more volume pre-market, the more playable it should be. So this is also a great way for you to build a watch list during pre-market hours. So a lot of us, we're pretty lost in the morning. You know, what should we be looking at? How should I be preparing? How should I keep myself busy? And the way by doing that is to look for the stocks that are actually trading already in the pre-market. Okay? If it has over 50,000 shares within the pre-market, then what do you think should be happening when the market opens? It should once again flow and become even more active, okay? Much more than stocks that haven't traded yet through the pre-market. Does that make sense, guys? So start looking and putting in your watch list stocks that have a lot of activity in the pre-market sessions. They're going to be very good in the market hours, okay? So Finviz, how many of you use this? All right, great. So many of you are aware of this. This is every day. This is a great free scanner. And what I usually use is the major news, which is in the home section. I'll go over that later. But what you could really do here is you could look at unusual volume, most active, most volume, and 52-week highs, things that are making 52-week highs. With that being said, you could even limit it a little bit more. So you could raise the volume to an average of 1 million shares per day, and you could raise the price to $20 or more, okay? And at that point, your job isn't done. You don't just take the stocks that are coming from that scanner and say, hey, this is going to be my next watch list. No. What you have to do is you actually have to go through each stock, look through the 15-minute, the hourly, the daily, the weekly, and the monthly. And if you want, you could even do the 15, okay? But that's pushing it a little bit, right? And look for setups. Look for things that have potential, okay? And then take that potential, put it into your watch list, take a notepad, and write down all the necessary big price levels. And by doing that, you're going to be able to take advantage of that. Yeah, well, I use Thinkorswim, and if you want, I'll do a little bit of a demo of how I set up my watch list. Just remind me if I forget, Trader 2. All right. Any questions on FinViz? All right. Here you could use also the pattern recognitions, and this is great. You just have to make sure. FinViz has gappers. Yes. Let me just show you right now. Too bad I can't share my screen at the same time. Over here, I'm not seeing it. I don't see it here on FinViz, but like I said, you could use Benzinga or CNBC. And you could also just scan through gappers and dumpers by going through most actives and stuff of that nature. I have a YouTube video. Check out our YouTube page, and you should be able to see a FinViz tutorial. I'm gonna write that down actually, just in case I don't have that. I'll make that one for you. So keep an eye out for that. All right. Now, so you could use Yahoo Finance, and I want to let you guys know every day what I look at Yahoo Finance. I'll tell you right now, and I'll type it in here. What I want to look at is yesterday's after hours earnings. Okay, only after hours, because you're not going to trade them when the market closes and after hours, but they may still have activity lingering to the next day, right? So you want to keep an eye out on after hour earnings the day before and pre-market earnings the day of. Okay? And most important, always go to Yahoo Finance, go to the economics section, okay? And see what numbers are coming out. All right, a lot of people, they'll go, why is the market slow? How come I don't see much activity? What's going on? What kind of day is this? And they don't realize that in the next 2 hours, there's an FOMC meeting. Okay? So if you want to be a trader, you have to be aware of what's going on and what's going to affect the market, especially when you're going to be in a trade or when you want to trade. Guru Focus, very good. Briefing, and I love StockTwits, guys. I look at StockTwits, and what I'll do is I'll look at what's trending now, okay, and I'll pop that up a couple times, and then I'll also just go to the stream, and sometimes I'll just watch the stream, and if I see something interesting that I haven't looked at yet, I'll take a look at it and see if there's anything that I could find, and if I could find it, or even if I don't find anything, guys, let's say you stumbled upon a stock that is moving so nice. I mean, it's holding the 5MA, not crossing the 5MA, beautiful momentum, nice moves, no place to enter yet. That's still a reason to be able to put that in your watch list. It's moving nice. It could provide good opportunities. Maybe not now, but you want to take a look at it later, okay? So always be very active with watching stocks and being able to put that in your watch list. So, now we're up to the watch list. So the watch list is your food plate composed of carefully screened, filtered, and selected ingredients. 4 to 6 selectively chosen stocks. Now, for me, I do a little bit more than that. I do about 10 to 15 that I watch at all times. But like I said, I'm very organized. I have other watch lists that if it's a very boring day and I can't find much opportunities from my own watch list for today, I'll go to my other watch list and start scanning that as well, seeing if I could resurrect any of the stocks that I felt were noisy already. Does that make sense to most of you? Now, very important is watch list should be finalized by 9:15 every morning with price levels, compelling setups, and possible pair sympathy plays. Okay, does everyone know what sympathy plays are or no? Okay, so sympathy plays could be used or taken advantage is basically taking advantage of a certain sector. So let's say, for instance, oil, okay? Oil is rising to the roof now after it fell off. Do you think that's going to affect the airline industry? That's sympathy, okay? That's sympathy. And that's why it's very important to be able to know the different sectors and to be aware of all the different stocks that are out there, at least the most popular from each sector, okay? For instance, LVS. Does everyone know what LVS is? It's Las Vegas Sands. Does anyone know any other stock that you could correlate with LVS? MGM, there you go, the perfect one. MGM, and then you could also do WIN. But which one is the leader and which one is the laggard? Can anyone tell me? Yeah, great, perfect, right? LVS is the leader, MGM is the laggard. So if you see a huge setup forming on LVS, okay, most people aren't aware that MGM may do the same thing. So you could take advantage of a smaller price stock, take a bigger price, take a little bit more shares, and be able to ride on its coattail, so to say. All right? So that's what sympathy is. I just wanted to go over that. So the reason for having everything finalized by 9:15 is to be able to take a breath, guys. Okay? Everyone needs to take a breath. Don't look at the charts. Take a break for 5-10 minutes. Okay? You're not going to be trading anything anyway for about the first 10-15 minutes for most of the time. All right? Unless you want to trade a gap strategy. We have 3 different gap strategies: a gap and go, a gap and crap, and I forgot the other one, a dip and rip. Okay? Those are the 3 different gap strategies we have. Now, so screen gappers, dumpers, we went over this, right? On the pre-market top 10 list for NYSE and NASDAQ, look for stocks that have fundamental catalysts, okay, such as mergers, takeovers, acquisitions, and use multiple watch lists to separate and organize your stocks, like I said before. And most importantly, guys, this is going to be recorded. Now, I'll leave your email, Benton, and I'll make sure to email it to you. So, a lot of people, one of the biggest mistakes that a lot of people do is they don't assess the overall market and when the market opens. Instead, they go right into trading the markets. And here's the problem with that, guys. And I'm going a little off topic because we have a lot of people in here, and you guys are great. So, the reason why you want to assess the market prior to trading is you want to know, out of all the different types of strategies and setups that you have in your arsenal, and yes, we call it an arsenal, all right, guys? That's another terminology. We call all our different setups that we have pups, mini pups, market structures, okay? Perfect storms, all right? Plan A's, Plan A, B, okay? I could think of a couple others, okay? All of these are arsenals, different arsenals that you could use to take advantage of the market and make your money. However, not all the time are all of them going to be able to provide you good opportunities. So, you have to assess the market, see whether it's choppy, it's tight, or it's broad, it's expanding, is it slow, is it fast, is there big news? All this, you have to build a big picture and say, hey, you know what, it's not that good of a market. I'm going to restrict some of my arsenals, put them away, because I know that some of these arsenals aren't going to have that high of a probability of working out in this type of market condition. So you limit them, and then you only take what you are confident with to work, even in the most minute conditions of the market. Does everyone see how that makes sense? Not every day, all your setups, all your strategies are going to work. You have to assess the market every day. It's a living, breathing organism that you're going to have to assess and be able to know what you're going to trade and what you're going to stay away from for that day. And sometimes it could change, all right? Now, I just wanted to say tons of more research material available in our education, because there's a lot of things that I had to skip for research. So I want to show you how much more research do we really have to offer. And these are just bullets of huge amounts in each bullet that we provide. Fast chart analysis, how to analyze a chart within a minute or so. Quantitative fundamental analysis, qualitative fundamental analysis, and total immersion. Okay? For intraday trading, level 1 will suffice, and some level 2 research. As you get more specialized with specific stocks, you can apply level 3 and ultimately level 4 to your core specialization stocks. Now, before we go to the Q&A, there was one slide that I feel I may have missed, and I think it's important to go over. And a lot of times I was going over catalyst, and why is that important? And for the present time, it's actually very important. And I'm going to go over something called systemic risk and non-systemic risk. So let me pull this up for a sec. Give me a sec, guys. I'm going to go off topic, give you guys a freebie here. Okay, so this is called correlations and systemic risk, guys. All right. So now, obviously, people know that a correlation is 1 or -1, right? 1. Okay. Let's just put it that way, make it simple. Each stock has a correlation. Okay, 100% correlation to the overall market. Now, 60% of that correlation, of the one correlation, 0.60, is based on the stock movement attributed to the general market movement. Okay, and this is called systemic risk, because what systemic risk means is that it's risk that you cannot avoid. It's global risk. Okay, no matter what you do, you're not going to be able to avoid this type of risk. All right. Now, 60% is attributed of the stock. 60% of the correlation of the stock's activity is based on the overall market. So let me ask you guys a question. If the overall market is choppy and consolidated and slow, what do you think most of the stocks are going to do? I think most of you could answer that question, right? Yeah, it doesn't matter. I'm pretty much done with the webinar. I'm going off topic. So it's going to be slow. The stocks are going to go sideways as well, because most of them do correlate to the overall market. However, 0.40 of that one correlation, okay, is based on non-systemic risk. And non-systemic risk is only sector-related risk. So for instance, if you have a portfolio of airlines, electric, tech, gas, whatever, right? But airlines is having a bad day, bad news. Is that going to affect the rest of your portfolio? Or is it only going to affect that sector specifically, guys? All right, it's only going to affect that sector. All right, that's why it's non-systemic risk, risk that isn't going to affect the global overall market. Why is this important? Because 40% of that correlation is where most of your opportunities are created, guys. And that's why a catalyst is so important, especially in a dry market condition, when the market is very flat and slow. Because if the overall market isn't going to provide you activity, then the only thing left you have is the sector or the stock itself to provide you enough volatility and enough movement to be able to have opportunities. Does that make sense to everybody? Anybody have questions on that? Because I think that's really one of the most important things to take away from this. All right? That's how you stay away from fake outs, guys. Patience is key. Look for stocks that have catalysts, that if the overall market is slow, then you know where your opportunities are going to be found, right? It's going to be found with stocks that have news and catalysts, fundamental catalysts. However, if the market is great, okay, and you also have a catalyst, it's even better. That's the best thing you could have. You have the market being wet, okay, having great conditions, and you also have a catalyst. That's the best of both worlds, okay? The Chinese stocks the past few days, what about them? They could be good. Honestly, I kind of stayed away from them. I was trading, I'll tell you right now, I was trading AET, I was trading HUM, I was trading LB. See, I'll tell you right now, guys, what I was trading this week so you can get an idea. Today I traded LB, COTI, okay, WBA. I stayed away from AET. Pepsi was one of them. Apple. Where's the rest of my list? Hang on, guys. And TAP. Okay? And TAP. If you look at these stocks today, you'll see the type of moves they had. All right? In the previous days, I did AET, I did HUM. Let me check my journal to see. I did CE, I did CNC, I did Guild, I did HNT, and those are the ones I traded this week. All right, guys, so I think it's time for Q&A. And also, guys, we have a great opportunity for you. For those of you who want to get an idea of our education, you have an opportunity to save 250 bucks. Here's the coupon code. Oh, yes, TOS. Let's just stop sharing this for a sec and share my screen. All right, guys. So just since a lot of people are still in here, here is my cockpit. All right, guys. You have the 1 minute, the 5 minute, the 15 minute, the 60 minute, and the daily. All right. I don't just look at the 1 and the 5. I look at everything. So what I do is I have another monitor with the same windows. Okay. But all of them are different stocks and all 1 minute. And if I see a setup happening on the 1 minute, then I'm gonna put it into the cockpit. And I'm going to inspect it deeper. Do you see how that makes sense? And how that helps, guys? Right? So, watch list. So, let me bring this up right here. So, here's the watch list in Thinkorswim. Trader 2. Right? Now, this is my overall watch list. Okay? Oh, sorry. This is my overall watch list. This is the watch list where I have all the stocks that I've been looking at for the past month or so. All right. And from here, what I do is I take it into a new watch list. Okay. And I look at each stock. So let me show you how I do it. I look at each stock. I look at obviously I look at the hourly, the daily, the weekly, and the monthly, right? And monthly, sometimes you don't find anything unless it's really close. And what you do is you look for setups. And I'll just give an example. Here's an inverse pup for, not really actually. Let me see if I can find something better. So as you can see on the 1 hour, there was something we call a pup, okay? I didn't do anything. I stayed out for the rest of the day. There was going to be no liquidity that day. So tap. So over here we have a pup, okay, for a continuation breakout. All right. Now, if I looked at it the day before, not today, right? If I looked at it the day before, I'd be able to see that it was forming this formation. Okay, rejecting the 15 and coming back up. By doing this, all I have to do is take tap, okay, make a new watch list, put it in there, okay, and then what I also do, okay, is I also put an alert. And this is why I like Thinkorswim. I don't trade with Thinkorswim. I trade with Sterling, but I use Thinkorswim charts, guys. Just FYI. And then I'll create an alert. And I'll create an alert. This way, not only do I have it on my watch list, but I'll also know prior to it actually starting to come into existence and play out, I'll already know to start looking at the stock. So you want three different type of watch lists. It's not fast enough for the type of trading I do. For intraday trading, I don't trust TOS. For swing trading, for long-term trading, TOS would be great. Options, TOS would be great, besides the commissions part. That's the other reason you don't trade with TOS. Yeah, they're retail. That's like the opposite of Sure Trader, right? It's the same guy. I think Guy Gentile. Yeah. I just want to make sure. Herb, did I answer your question? I don't want to leave you empty-handed. Great, great. So one last thing. So let's just finish up with the questions. So what type of questions do you guys have? Any last questions? I used to. I feel I only look at SPY to correlate with my equities, right? But I used to have algorithms. Well, we use SPY to correlate with our stocks. Most of the time, we will not trade unless it's correlating with an overall market. Now, if you want, you could obviously use the QQQ, depending on the stock that you're looking at. But I use SPY overall. It doesn't matter. I'm very comfortable with SPY. So you don't want to be think about it this way, Orlando. If I told you that there was a setup to go long on Facebook, right? But SPY was going down, would you be cautious of taking that trade, Orlando? Right? Because you have things going against your direction. This is what we call headwinds. Okay? The more headwinds you have going against your direction, the more choppier your move is going to be. Okay? And the more possible it's going to be a fake out. So you want to try to clear the way or clear your path with the least amount of push going against you. Okay? If you could do that, you're going to have a lot more fluid moves. So, Herb, to your question, I used to have an algorithm on FAS, TNA, SPY, GLD, okay? But they don't work anymore. The momentum is done on those. Volatility as well. They used to be one of my faves, but I don't see them reacting the way they used to a couple years ago. I think you would agree with me if you watched it for that long. Nuriel, it's never smart not to prepare. It's like saying this, Nuriel. If I ask you a question, if I told you that if you prepare the night before, you have a 25% chance more of increasing your profits or being consistent, would you do it then? There you go. Question answered. We're here to make money, right, guys? You do whatever you can to gain the edge over everybody else. Now, how many of you agree with this statement? The market, the stock market, is a zero-sum game. How many of you think that it's a zero-sum game? Anybody else? All right, so a lot of you think it's 50-50, right? Believe it or not, it's a minus-sum game. Fair is right, okay? It's a minus-sum game. The majority lose and the minority win. And I just wanted to bring that out. Not even because of commissions. It's not an easy task, guys. Only the few are taking advantage of the majority. That's it. All right? It's not an easy game. And I wanted to bring that into perspective of the competition you have here, guys. It's not an easy game. What do you mean by that, Nuriel? Followers, I think that's kind of vague. Could you be a little bit more specific? Yeah, but it's not like that. In reality, it's not like that. It's a minus sum game. You have to dig out of the hole much harder than you thought. It has to do, you want to do good in the market, you got to have conviction. You got to be serious about it. You got to be realistic, and it's about training, not just education training, but also live market training, being in the market, actually experiencing it, and not fooling around in it, but actually trying to build something upon it. Okay, and it can take a long time. You know, so preparing like this will definitely help. I don't know what kind of setups you guys trade, but whatever it is, look at the wider time frames today. Remember the hourly, the daily, the weekly, and the monthly. Look for setups, see how they play out the day before. Actually, I have a video for you guys. You know what? I did a video 2 days ago of evening research, okay? And then you guys could see how it panned out the day before. Where is it? Oh, I can't find it. Weird. I thought I posted it. Maybe it's in the community. Hang on a second. Yep, alright, I got it. You have to be part of our Alpha 7 trading group. Here, you could sign up. It's free. And sometimes I post exclusive stuff. You also have a free 3-day chat room on top, guys. Duran Yowitz? It's a very, very broad... It's a broad answer and a broad question. It's not just psychology. It's many things. Yeah, just leave your email and tomorrow I'll be able to email you guys the recording. The list? What do you mean list? It's I'll write it down for you. So 0.60 of one correlation. Okay. Sorry, 0.60 is right, and then 0.40 based on non-systemic risk. If you want to find things that have, you want to find catalysts. So what you want to do is look at finviz.com, and on the homepage there's something called I trade the E-mini. Actually, I have a trade. You can look on the Facebook. I did a reversal on the E-mini yesterday for 350. 3 contracts. Here, I'll show you right now. So you can see my screen right here. So you see this? This one right here, the ES. Low, do you see that? No, I don't trade OTCs. Right? So this is a reversal, right? This is called the market structure low, one of our setups, the first setups you learn, actually. And you can see that there was barely any risk on my end. Go on YouTube and look for the market structures. and you'll be able to get an idea of the setup. These form every day, guys, these market structures. They're a very good setup, and usually swing trades start from a market structure low, okay? And then I had the other one, which was AET. So you can see I took it from around 113.63 to 114.19. Do you guys see that? Those are my two trades. Only two trades for that day. That's how patient I am, guys. You got to know which ones to pick and which ones to stay away from. That's how you build consistency, and that's how you're going to be able to make it. Don't overtrade. Wait for the right ones. You have to pounce for your prey. Wait for the right market conditions, guys. It's like looking for the alignment of the planets. Same thing. Yeah, patience is one of the most important things. This is an impediment, and we teach you how to eliminate an impediment. So that impulsive would lead under recklessness, okay? Indecisiveness. Try to limit yourself to like 3, 2 even for this type of market. You're not going to find much in this market. Any other questions, guys? My pleasure. My pleasure. Oh, not much. I had two trades, up $60 on LB and down $17 on TAP on 300 share lots, so 43 bucks. All right. Clark, I just want to let you know, I like to trade small shares because my chat room isn't for me to prove to you that I'm a good trader. It's for me to show you guys, to teach you guys how to be a good trader. So I need to keep things as realistic as possible. And if you come to my chat room, you'll see it's completely unorthodox compared to the others, okay? Because I'm not calling out trades on behalf of myself. I'm calling out setups and trades for you guys to be able to question me, so that way you could understand why I'm getting into the setups and be able to eliminate misconceptions. All right? The chat room is more or less for education than it is for you to learn how to take profits. I want you guys to be able to live off yourselves, not off of my calls. Okay? It opens at 8:45. So for instance, Clark, I would have either a setup alert, okay, which means I'm not getting in it, or I would have a trade alert, which means that I'm getting in it. Okay, so that way everyone could separate and understand which ones I'm taking and which ones I'm not. But I do setup alerts so we could still learn in the process. Yeah, I really don't look at anything below $20, really. I don't think it's going to move much. Sometimes I'll look at stocks like Nugget, Orex, if there's a catalyst, right? Because then you have a cheap stock that's really going to fly and have some momentum and some range. That's the only time I'm going to trade a stock that's a low cap. But most of the time, you don't have much catalyst on low cap stocks. Yeah, of course. I don't care where the market goes as long as there's volatility. I told someone today, I only want two things, either panic or confidence in the market. I could care less otherwise. I just don't like indecisiveness like this market right now. There's a lot of inconsistencies and moving pieces that are incorporated into the market now that the market is completely lost. I mean, its head is spinning right now with Greece and NYSC. It doesn't know which way it's at right now. What I do like is that it's the second day it's closed below the 200 MA on the daily SPY. Okay? Although yesterday it closed below the 200 and it opened today above the 200, which was a little flimsy. So I'm glad that it closed below the 200 again today. No, I just go off of my pre-planned stocks and watch list until 9:15 from what I developed. And then throughout the day, if I see it slow and the food that was provided to me isn't enough, then I'll have to search a little bit further. And what I'll do is I'll go to like FinViz and go to the heat map. They have a heat map, and you could basically look at the sector, see which sector is kind of pushing the most, and then lead from there. What amaze? I used the 5. Thank you, Brandon. I used the 5, 20, 15, and 200. The 20 is actually the middle Bollinger Band, by the way. Try the chat room, guys. See for yourself. I just hope you get a nice busy market day. Anybody else, guys? All right. Wait, we got people typing. Thank you, David. Thank you, Clark. Great questions, Clark. Thank you. Later, Miriam. Bye, guys. Do you guys want me to close this and send you to YouTube so you can check out the other videos of ours? All right, cool. I'm gonna do that right now. I'll do that for you, Noah. Let me check right now. I can't tell you on a minute scale because the market's closed. Now, Noah. One thing about Noah, it's been gapping around sporadically on the daily. There's a lot of gaps. It filled the top one, still has one on the bottom, very light, not much, about 40 cents. The hourly is kind of forming a trend continuation on the upside. One thing I'll let you know is that If it does want to go higher, it's gonna have to break 27.56 Eastern Standard Time. All right, Eli. But you also need the daily to still be crossing up on the stochastics, and the weekly's kind of down. Remember one thing, guys. The wider time frames hold the strongest undercurrents. So if the weekly and the monthly are pointing downwards, but the daily is pointing upwards, in due time, which way do you think the daily is going to start pointing? Down, right, guys? Because the wider time frames hold the strongest undercurrents. Remember that. So no, I don't like that much. I don't think it's providing much opportunity so far. Cena, and I'm very picky, by the way, Eli. Cena, same thing with the hourly. It has a chance of pushing back up as long as it holds the 15-period moving average on the hourly. If it breaks 49.90s, it could go higher on Cena. Okay. Once again, it needs to converge. All the other time frames need to be aligning upwards with the hourly. All right, Eli. And last one, CMCM. I haven't seen anything yet from your three choices that are good. I mean, now this is nice. This may be a reversal on the daily, and this could be a setup. So 26.66s on CMCM. Okay. And I'm actually going to give you a stop on this. The stop is the mid BB on the hourly. I can't really give you the hourly, you see. I need to see what the shorter time frames are. If you can, Eli, shoot me an email tomorrow, and I'll do my best to provide you my input or output, whatever it is. All right, and I'll see you guys later. I'm gonna put that out right now for you guys. Send you to the YouTube, and thank you guys for coming. I really appreciate it. We have another webinar, guys. July 23rd. July 23rd. How to trade in a consolidated market. It's gonna be a real good subject. So I'll see you guys later. Enjoy the rest of your day.